This is one of the greatest business stories that I've ever witnessed. For those that don't know, WallStreetBets is a subreddit community that proudly treats the stock market like a casino. Now last year, one user, we'll call him DFValue, found out that a bunch of hedge funds had shorted a stock called Gamestop. This was a struggling retailer that sells video games. The short interest was huge, over 100%, which means that hedge funds had taken positions using derivatives and sold more stocks than actually exist in the company. So DFValue goes ahead and starts buying some call options and starts posting about it on WallStreetBets. So a series of events took place, a new board member, a pivot to more like an online focused strategy, and the stock starts gaining a little bit of momentum. It went from $5 in August, and at the start of this year, it's trading at around $18. As the share price starts going up, all the hedge funds that have shorted it are starting to lose money. Things are about to get a lot worse. Now, all the users from WallStreetBets start piling in and buying stocks and call options and adding fuel to the fire. One particularly exposed hedge fund, Melvin Capital, had previously boasted about shorting Tesla stock. Elon pipes in with a one-word tweet and things go into absolute ludicrous mode. The problem is they sold so much stock, there isn't enough sellers for them to buy it back at a reasonable price fast enough for them to cover their positions. The share price goes through the roof and is trading at over $100. Melvin Capital now owes more money than it has on its balance sheet and is facing liquidation. One of the world's largest market makers, a company called Citadel, provides a $1 billion bailout, which doesn't last very long. But Citadel has a few other tricks up its sleeve. See, they're also highly influential in the markets. They actually purchase order flow from companies like Robinhood. The next thing we know, a bunch of stockbrokers, including Ameritrade, Interactive Brokers, and Robinhood, all block customers purchasing GameStop stock. They're still allowed to close positions, so they're allowed to sell GameStop, but they can't purchase it anymore. It's widely speculated this is caused by influence from Citadel, who are possibly overexposed as well. Now you can imagine how WallStreetBets users reacted to this. Many of them use Robinhood as their main broker. Some of the biggest names in Wall Street are now opening themselves up to litigation through blatant market manipulation, and there's got to be an underlying problem here. People are speculating that the fallout from this and the knock-on effects could be the biggest knock to Wall Street since the 2008 collapse of Lehman Brothers. Tomorrow, Friday 29th, a large amount of call options expire, and there isn't enough liquidity on the markets currently to fulfill a need. Short interest is still over 100% and the stock's flying. The big question is, will WallStreetBets users and anyone else that's jumped on this trend sell, and if so, at what price? So I did what any sensible spectator would do. I picked up some popcorn and YOLO'd in. At this point, it's not a financial investment, it's a donation to the cause. There's zero chance I'm going to be able to make financial gains from this, but at least I'll be able to tell my grandkids about it one day. I went on FTX, link in the description, and opened up a small margin position on GME USD. I know I'll never profit from it because I'm not selling. It can get liquidated as and when the WallStreetBets users see fit. I love an underdog story, and this has brightened up a cold winter lockdown for me. For those taking on Wall Street, good luck to you.